guys? Welcome back to the fifth episode of the trading course. In this episode, we're going to cover, exponential moving averages. I use them a lot, like not just from the trading calls that I make in the Discord server, but like I talk a lot about EMAs on my YouTube videos as well. Let's dive deeper into this, right? Let's understand exactly what EMAs are. So just to, give a little bit of a backstory about EMAs, they are basically just moving averages, right? So for example, if let's say I bring up a 10 period exponential moving average, right? So EMA 4 right here, this is a 10 period EMA, right? EMA 4 length 10. That means that this blue line right here, if you can see that clearly, right? This blue line right here, for example, is the average price of the last 10 candle closes, right? So long story short, it's like that's all the moving average is. And the difference between an exponential moving average and a simple moving average, which if I just go onto indicators and search simple moving averages, right? The only difference between exponential and simple is that exponential tends to put much more weight on recent price action, whereas simple moving averages are simply, as the name suggests, it's just a simple moving average, which means that if you want to, there's pros and cons to both, right? So for an EMA, you tend to be able to catch a shift in trend much quicker, right? So for example, like if I just close all of the moving averages, say, like I'll just leave the 50 and the 200 open, right? And then I'll turn on my simple moving averages as well. And I'll just close the 21 and the 100. So right off the bat, you can see that during this downtrend right here, like this is a downtrend, right? So you notice how the 200 EMA, right, the exponential moving average, which places more weight on recent price action, like look at it, it's already started to, shift down, right? And especially the 50 EMA as well. It's already, it shifted down way quicker than the simple moving average did, right? And at the moment, it is shifting up, right, quicker than the SMA as well. So there are pros and cons to both. So for starters, right, if you want to catch a shift in trend quickly, then EMAs are the way to go. But if you want to identify a long-term trend, then SMAs are usually the better way to go. But all in all, though, I would say you wouldn't go wrong with using either of these, right? So I'm just trying to find a good example of where the SMAs were more valid than the EMAs. But in general, they are pretty similar. So I would say use both, right? If you don't find any points of interest when you're taking a look at EMAs, then you can bring up the SMAs and just take a look there. But if there is one thing I would say though, is that in crypto, right, just in crypto in general, I found that the SMAs are, I would say, less effective than the EMAs simply because of the people that are using them and the fact that crypto tends to be quite a volatile market, right? Like, if I just use a SMA, then, I'm just getting just a simple moving average. But the thing about the EMAs that beats out the SMAs, in my opinion, right, in my opinion, and in my experience, is the fact that the SMAs react quickly. So the thing about crypto is it's very volatile. Everybody knows that, right? Things go up and down 50% in one day, and that is very normal. How do I put this? For identifying a long-term trend, I would use both, actually. In fact, I use EMAs like 90% to 95% of the time. Like, it's pretty good at identifying the long-term areas of value as well. Like, if you just take a look, like if I just zoom back, like real far back, you can see that the price actually found support on the 200 EMA multiple times, right? And the SMA as well, right? Like over here, the EMAs are acting as support, and over here, the SMAs are acting as resistance. So it works both ways, right? Both are effective, and you cannot go wrong with using either one of them. But if I were to pick one, right? If I didn't want my chart to be really messy, I would pick the EMAs over the SMAs simply because of the nature of crypto, right? But if I were to go onto say a daily chart, for example, where this is more of a long-term kind of trend, then 100% I would look for the SMAs, right? Because SMAs are really, really good at identifying long-term trends. Like, look at this. Price found exact support at this 200-day SMA right here, which is this yellow line. So it's like you can't really go wrong with either. But if I were to pick one, I would go with the EMAs. But again, the SMAs, right, or all the exponential, like all the moving averages, they are a tool in your toolbox, and you can bring them out if necessary, if you need, like, just extra confirmation or extra confluence. So you don't have to keep them on all the time. But if you want to get, like, just a clearer picture, yeah, you can use the SMAs. Like, all you need to do is go onto indicators and search for 5 SMAs, right? That's the one that I prefer. So you just go down to 5 SMAs, go into the style, right? And look, like, all you have to do to enable a 5, SMA is just to search 5MA on indicators, right? This one by Inlander, I really like this one because you can change the inputs, right? If you don't want 9, you can change it to whatever, and you can change the style as well. So for me, my SMAs, for the 200, I use yellow. For the 100, I use orange. For the 50, I use white, I believe. For the 21, I actually don't use a 21 SMA. I don't even use a 10 SMA, simply because it's, like, if you're going to be using SMAs, right, like these short input SMAs, where it's better for identifying strong trends or recent trends, if you're just going to do that, I would much rather just use a EMA, you know what I mean? So I wouldn't enable like a 9 or a 20, and I would just straight go into 50, 100, and 200. That is the way I would use SMAs, right? If you want to change the thickness, you can do so. So that's SMAs and EMAs, right? That was just a brief intro, right? So EMAs are, they're better at identifying they react quicker because they place more of a weight on recent price action rather than simply just, move an average. But if you were to talk about identifying long-term trends, I would 100%, I would go for the SMAs, but the EMAs work as well. Because look over here, right? 200, it came right down here and found support, right? Came down to the 50, found support, right? Came down to 50, found support, came down to the 50, found support. Like, if I just go on to, say, the 12-hour, look, right? Like, both work, okay? Both works. It's just, if you need extra confirmation, then bring them out of your tool belt. So now that we have a simple understanding of EMAs and SMAs, and by the way, if you wanted to know how to set up your EMAs, right, go onto VMC Cipher A, right, and just go into your style. I would go into inputs, right? I see a few of you like not doing this right. So for me, I start from EMA 4, 5, 6, 7, 8. And you can see that I just changed their values, right? 10, 21, 50, 100, 200. I don't actually use the 10 and the 21 much, to be honest, because I like to identify like stronger areas of value. And I'll get into that in a bit. Actually, I'll get into that right now. So because you know that the EMAs are an average of recent price action, it would mean that a 200 period, right? 200 period means that it is a very, how do I put this? It's a very lagging sort of EMA, right? It's not quite recent, which means compared to something like the 10 and the 21, both of these are good indicators of a strong trend, right? They're good for finding areas of value in a strong trend. And by the way, the reason why I use EMAs is because they're really good at finding areas of value. Now, what are areas of value? So there is a saying, I always like to say this, right? You don't want to be taking trades like in between these two levels right here. You don't want to be entering a trade like, let's say here, right? This is literally the middle of nowhere. Like, if you go long, then where's your stop loss going to be? Like down here. And if you do go long, then what's the profit target? Here, right? The risk to reward is terrible, right? 0.5. And if you were to go short, it's the same story. It's not a very good risk to reward ratio. So the way I use EMAs, is actually to find areas of value. So other than support and resistances, which I hope you guys know how to identify after watching the trading course video, I use EMAs to, get extra areas of value. So for example, if I were to just remove all of these drawings, right, you can see that during a strong uptrend, now actually I might even go into the 1 hourly just to show this a little bit clearer. Notice how, like, during a really strong uptrend, right, price tends to find support at the 21 EMA, right? So a necessity, right? It's not a given. It's not 100% that a price will find support at any of these levels. But if the price is going to find support anywhere, it would very likely be on these EMAs right here. So a 21 is used for identifying a strong trend, right? In fact, the 10 is used for identifying a really aggressively strong trend. Like if I just bring up the 10 SMA, right? I don't personally use this, but there's nothing wrong with using a 10 SMA. Right, notice how price has been finding support on the 10 SMA. I'm sure you would agree that this is a really strong trend. It literally went up by, 16% in 19 hours? And a 21 is used for identifying a strong trend. A 50 is used for identifying areas of value in a healthy trend, okay? A healthy trend, right? And just to put this into perspective, the 50, the 100, and the 200 EMA are, I would say, the EMAs that most people use, right? It's almost like a self-fulfilling prophecy, right? If you're gonna tell me, do I have any proof that the EMAs are, superb technical indicators? I wouldn't say so, no. In fact, I would say probably a very large part of why EMAs work is because everyone uses them, right? Especially the 50, the 100, and the 200. Especially the 50 and 200, okay? Everyone uses a 50 and a 200. So what happens when everybody is using them is it almost becomes like a self-fulfilling prophecy. Like, oh, hey, the price is coming back to the 200 EMA, so it's probably going to get rejected. So let's sell there, right? Boom, comes down. Like, forget the people, right? Forget people using this. Bots are programmed to find rejections and support off of these levels, which means bots are programmed to buy or sell when price gets to this level, which is why you always tend to see a strong reaction to these levels whenever price goes near it. Like, for example, over here, right? We go down to the 100. Yeah, we got a nice bounce, but especially if you go down to the 200, you're going to get a monster bounce. Just take a look at this, right? Like over here, 100 EMA, it gets rejected, right? These are strong rejections. Over here, we're finding support on the 200 EMA, and right now we broke it below the 100 EMA, and now it seems to be coming down, right? And the reason why EMAs work is, everyone uses them. So it almost becomes like a self-fulfilling prophecy almost. Right, I got a little bit off tangent there. So EMAs, how do we use them, right? The 100, okay, so the 21 is for a strong trend. The 50 is for a healthy trend, right? The 100 is for, I would say, like a medium trend, right? It's not really weak, but it's not really strong as well. So it's just like a medium. It's just like, I don't actually use the 100 a lot, but I found that it tends to work quite well, right? But the one that I really, really like to trade off of is, in fact, the 200 EMA. Because when traders look at the 200 EMA, what they see is, this is like a macro level support, right? If price were to break below the 200 EMA, you're in for some deep shit, okay? So it's, to put it in lack of a better word, it is, I would say, the strongest EMA that you should pay attention to. And usually, when price reaches either the 100 or the 200 EMA, on any time frame, yeah, there will tend to be a pretty strong rejection or support from that level. So if there's something that I like to do is, in fact, just wait for price to come down or go up to the 200 EMA, and then I'll actually short that, right? Because the 200 EMA, chances are, right? Like I always say this, trading is a game of possibilities, and the way you win is by taking the higher probability trades over a sustained period of time, and that's how you win. So the chances of price getting rejected off of the 200 EMA over here is higher than the price if it were to break through. So I would place a short here, and it would have turned out very well. And as for how to place a stop loss, I'll get into that in the next video. Again, I got a little bit off tangent there. But the way that I would trade EMAs is wait for the price to come back down to the 200 EMA, and I'll just place a long here, right? And I'll just place a long here if I find that price has found support. And who knows? Usually I go for at least a 2-to-1 risk to reward ratio, but usually I use Market Cipher to tell me when the price is, reaching a top. So that would be over here. So I would exit over here. So that would be a 5-to-1 risk to reward ratio. So just to give you a few other examples, I believe we did a call on H bar recently, if I just go onto the 8 hourly, so if I just go onto the daily chart of H bar, you can see that I was back when H bar was like, I don't know, like I think back when H bar was at like 0.33 or something, I made a limit order at limit long 0.192, right? Because back then this was the 200-day exponential moving average. And right, over here we found support as well. And I believe like this was some important fib level or whatever. So I had multiple confluences at around this level. So I called the limit order and I just forgot about it, right? I didn't check back on it until like recently I found that we made almost 80% off of this limit. Like look at this. It came like, ignore this. I believe this was during the flash crash. But yeah. So this was when I called it, right? When H bar was like around here, and I called this like back in late April. No, I don't exactly remember when I called it, but I do remember that the price came right down to this level, right? Like we longed the exact bottom, and then we went out by like 80%, like 80% right here. Like just, it's not always a given that price is gonna find support at the 200 EMA. The chances of it finding support are much higher than it not finding support, right? It's just probabilities. That's why you always like manage your risk. Make sure you're not risking too much in any given trade, so that if you were to get stopped out, right, maybe you set your stop loss like right here. A 7% stop loss is pretty wide. Maybe you take profits here, right? You would have got stopped out of this trade, right? Just based on this wick. And so if you do get stopped out, you don't want to lose too much in any given trade, you know what I mean? So the other thing that you have to understand about EMAs is, for me, I personally like to use the 200 and the 100 to identify like really strong areas of value. But how do you, like, which is the strongest, right? And what I can tell you is the higher the time frame, right? If I, like, an EMA on the weekly chart is going to be stronger than, say, an EMA on the daily chart, and it's going to be stronger than one on the 4 hourly, and it's going to be stronger than one on the 15 minute. But I do not want you to get mistaken that you should only be using higher time frame EMAs to do your trading, because that is not true. Even if I just go onto the 5-minute chart, you can see that price tended to find a lot of rejection, right? You could have traded like all of these coins based on, all of these EMAs, right? On the 50 EMA, look, rejected, 200 EMA, rejected. Over here, 200 EMA, fan support, right? It works on every single time frame. But I would say that if you want to get sort of like the best risk to reward ratio, if you want to get those kinds of 80% pumps from the exact bottoms, right, like this one, I usually use the EMAs along with support and resistances, and it usually works out really well. But again, seriously, EMAs on all time frames are equally strong, right? What matters is the period, right? The 200 and 100 are really good for identifying long-term trends, and just know that if you really were to break below the 200, it's going to take a lot for you to go back up above the 200. And if you do break below the 200, and if you do break above the 200, it's going to take a lot, right, to break below the 200 again, right? As you can see, we literally went from like January until like what, April, before we finally break the 200 EMA on the 4 hourly. That's the power of a 200 EMA. Oh, and like the way like I tend to use the EMAs is, first off, always identify your support and resistances, right? That step, always step number one, right? Forget the EMAs. That is a technical indicator. What you need to know is you need to identify the macro level support and resistances before you can use the EMAs, right? What I use EMAs for is to find extra confluence, okay? I don't use them to start a trade. I use them to find extra confluence, right? If I were to like just simply go onto Rune, and by the way, holy shit, Rune is absolutely huge. I called Rune at 6.6. We went up by like, whew, damn, 120%. Wait, no, 123%. Damn. I hope you guys got into that. But anyways, so the way I use EMAs is, first identify your support and resistances. So there was a time when I called Rune at 10.8, I believe, and we had a really, really nice little bounce. If you identified this support line right here, and if you notice that price broke above it and it comes down, right, and you see that the 50 EMA is right near to this support line, that is like extra confluence, right? Because this is already an area of value, the 50 EMA, and then now you have support and resistances as well. And if you can add on a, like, let's say fib level, like I don't even know where to draw this, but if you even add on a fib level or something, then that's like even more confluence that that level is going to be strong support, right? Like look over here. I mean, yeah, you get the point, right? The more confluence, the better. So back to how I use EMAs is first, I front run, right? I front run the markets, right? Especially when we're in a super strong uptrend, like from 26th of March until like what 15th of April, Rune literally went up by what 270%. So I look for times when we are in a extremely strong uptrend, and I look for a pullback to any of these moving averages, right? Any, especially the 100 and 200. That's where I would place a long position. And look, this would have been a brilliant trade, right? Just place it below this swing low, and risk to reward is bloody amazing, right? Even if you don't go for that, like even with a 2-to-1 reward ratio, risk to reward ratio, you would have got like 11%, 100 first, right? When we are in a strong uptrend, we always hit the 100 first, right? Always. We always get rejected off of the, we always find support off of the 100 first. So look for the 100, right? Look for the 50 and then the 100 and then the 200, right? If you just place bids all along this level, your position would have, like, for example, if you started buying at a 50 EMA, right, over here at 13.8, by the time you get down to the 200 EMA, your price would be at about like what, 12, 11, and you would have been able to write this up. Right, so that's method number one, you dollar cost average. But usually, I don't exactly dollar cost average using the EMAs. Like sometimes, right, when I'm calling the limits, I do. But most of the time, if I'm going to be, like, if I want to tell you like a straightforward, the best way to use EMAs, it would be areas of value. Imagine, like right now, like this 4 hourly 200 EMA, I would have in fact placed a short position, and I would have placed, I actually would have got stopped out here, but I would have placed a stop loss, just something like this, right? But I would have definitely got stopped out. And I would place the profit target at about here, right? At the 50 EMA. Because I know that all of these levels, all, right? Including the 10, right? All of these levels are areas of value. Which means prices either going to find support or prices going to get rejected off of them. Which means it's going to be smart if you can take into account all of these EMAs. So right now, I'm taking into account that price is going to find support at this level right here for sure. So I will take profits there. Here's another thing that I need you to keep in mind, right? Which is you don't really just like sit a limit order over here and just forget about it, right? If at all possible, you want to use market cipher along with, over here. So when the price was like over here, right? This would have been a brilliant nil short. If you were to be able to, take a look at the charts as it's happening before placing your order, that would be even better, right? So at the moment, we have marked this level as a 200 EMA. So we just come down to, say, the 1 hourly chart, and we look for tops, right? We don't go in here because we have not formed a top yet. But once this is confirmed, right, maybe on this candle right here, we can enter into a short position there instead of just going in straight like at the 200 EMA and just forgetting about it. Then we can, like, once this happened, right, once you wait for confirmation of a top, once you wait for confirmation of rejection, then it would be easier to place your stop loss because you can just place it at above this swing high right here. And then profit target similarly would be like right about there, right? Still 2-to-1, still really good. So let's do a little recap, right? EMAs are, another tool in your toolbox, right? Let's do another recap. So SMAs are good for identifying long-term trends, and the way EMAs differ from SMAs is EMAs place a greater weight on recent price action, while SMAs are better for identifying long-term trends because they are simply, just a moving average. Secondly, EMAs and SMAs are both equally effective, but if I were to pick one and forget the other, I would go for an EMA simply because of the nature of crypto, where things are very volatile and things move really quickly, right? Forget, like maybe just 50 periods ago, you might be over here, and then 50 periods later, you're down here, right? I wouldn't want to use an SMA in this case because if I just bring up an SMA, like it barely reacted. But if I were trying to identify a long-term trend, like say on the daily chart, 100%, I would try to bring the SMAs into the picture as well. So thirdly, EMAs and SMAs should not be used to like take trades off of, right? No, that's not the first step. The first step is your support and resistances before you use the EMAs to add confluence onto your, onto your chart. Fourthly, EMAs on the higher timeframes are stronger than EMAs on the lower timeframes, but EMAs on every timeframe are equally as effective, right? Because they're exponential moving averages, like they pretty much work similarly on every single timeframe, right? See, on the 7 minute, and then if I just go down to the 5 minute, it's pretty similar, right? It's pretty similar. And right now, 200 finding support. If I go on to say the 1 hourly, on the 1 hourly, this would actually be a 21 EMA. Fifthly, you want to understand that the 21 is good. 10 and 21 are good for identify like super strong trends. 50 for a healthy trend. 200 for a long-term trend. 100 for a like a medium. Like it's like medium, like not so long and not so short. And then you want to look for pullbacks, right? Because EMAs are areas of value. Chances are you're going to get a rejection or a support off of any of these EMAs, right? Any. So look for possible trade opportunities at around all of those levels. Moving on, I know this has been a long video so far, but I guess there's quite a lot to cover with EMAs since it's one of the tools that I use the most. You know what I mean? So next up, right, if you're still here, keep on watching, right? There's way more value. So now let's move on, right? And let's cover something known as the Death Cross and the Golden Cross. So simply what that means is a golden cross is when either the 50 EMA crosses above the 200 EMA. So that would be a golden cross, right? Sounds good, doesn't it? It's because it's the signal that an uptrend is beginning. So if we go all the way back, like way back, you can see that from the moment the 50 EMA crossed above the 200 EMA over here, right, back in November of 2020, until pretty much like 6 months later, the moment the golden cross happened, right, where the 50 EMA crosses above the 200 EMA, you notice that we have not been in a downtrend ever since. There was not a single time when the 50 EMA crossed back down to 200 EMA, right? So that's a golden cross. It's the signal that an uptrend is starting. So what is a death cross, right? Death cross is the opposite of a golden cross, and it's where the 50 EMA crosses below the 200 EMA right here, which signals the start of a downtrend. As you can see, boom. So how do you use, and the thing that you need to understand is it doesn't just work for the 50 EMA, right? It works for the 100 EMA as well. Always, right, for any EMAs, we always use the 200 EMA as the sort of, how do I say, like the master confirmation, right? If it does not break below the 200 EMA, then it doesn't really count, right? It's not going to be a strong death cross or a strong golden cross. It needs to go through the 200 EMA because that is the long-term trend indicator. So how do you use this to our advantage? So basically, right, all it means is when the 50 is above the 200, we only look for longs, right? Because we trade with the trend. We don't really trade against the trend unless you are someone who is highly proficient with market cipher. Then you could have taken a short here, and that would have been bloody brilliant, right? Just take profits here. That would have been a bloody brilliant trade. But let's make a separate video on market cipher in the future. But the key is, as a rule of thumb, right, if you're a beginner, you only want to take longs when the 50 EMA is above the 200 EMA. Because I always say we do not want to trade against the trend. In fact, you can see, right, during this 200, during that 200% move, you can see that the pullbacks were very minimal, right? You could have still traded these, right? 18%, 10%, it's nothing to scoff at, especially if you use 10x. And usually when you're shorting, you have to use that kind of leverage. You don't really want to trade against the trend because, you see, even though we get 13% pullback, we got a 39% move after that. Even though this was a 15% pullback, we got a 60% move after that. You want to trade with the trend and not against the trend, all right? So over here, I would have 100% taken a long at these two levels as previously discussed, simply because I'm looking for pullbacks to the EMAs, right, to the major moving averages, and that's where I'll take my longs, right? And now that the death cross has happened, I'm only looking to take shorts, right, until the 50 EMA breaks above the 200 EMA again. And here's the key you need to understand, right? You don't want to simply have the EMA break above the 200 EMA, right? You also want the price, right? You also want the price to break above both of those moving averages and to find support, right? You want it to find support on those moving averages and move up, right? If they can find support a second time, then that is your confirmation, right? You don't want to just enter at the golden cross because nothing is confirmed until the price breaks above it and finds support on the moving averages as well. So now that the death cross has happened, I'm only looking to take shorts, right? I wouldn't really buy unless, again, we buy oversold bounces, right? We buy when like people are panic selling, that's when we buy. But other than that kind of a situation, I wouldn't be looking to go long at, say here, here, or here, right? Because at the moment, the trend is indicating downwards. I mean, there's a lot of factors that goes into this. And when we make the video on Market Cipher, you will have a clearer picture of this. Then, just one last thing about how to use EMAs is to identify weak or strong trends. So you want to look for times when, the way you identify accumulation, right? Accumulation is when price is doing absolutely nothing. You want to look for times when the 200 EMA is pretty like flat. You know what I mean? It's like flat. It's not going up. It's not going down. It's just a very slight curve. Those are times when accumulation is happening, right? That's how you tell if it's in accumulation, is when there is no direction in the 200 EMA, which means that we do not want to be trading during these times right here because price is simply ranging and accumulating. We always want to trade during a trend and not during accumulation because price is going to be very choppy, right? If you can catch the bottoms and sell the tops, then good. But usually in a range, right, you're going to find it hard for you to trade like these middle parts right here. So don't try to trade in range, right? Especially like if you watch that video on trends, you know that when price is like ranging, price action is going to be very choppy, which means it's going to be hard for you to make any substantial, gains from that. So over here, the moment you see the 200 EMA start curving upwards, then you know the uptrend is starting, especially if you get the golden cross as well, right? And look what happened. At the moment, this is still a very strong uptrend. I would definitely not take any shorts during this time. Right now, we have curved downwards, which means we are going into a downtrend now. And if I want to put this in if I want to give you an even better example, let's take a look at XLM. Right, if I just go onto the daily chart for XLM, notice how during this entire time right here, right, other than this part right here where the 200 EMA was curving upwards, for this entire duration of about 4 months, you can see that we are just in accumulation. And the way I can tell that is by the 200 EMA being like really flat, right? Over here, strong downtrend, right? Strong downtrend. I would not go long during the fucking bear market, right? I mean, maybe I would, but that's another story, right? At the moment, we are, to be honest, we're still in accumulation because I don't see like the 200 EMA making any substantial moves yet. So this is the time when we want to buy, actually. We want to start accumulating. In fact, right now, you can see that the 200 EMA is starting, right? All of these major moving averages are starting to head up. And there's this saying that the longer the accumulation, the bigger the pop-off is going to be, which is why I believe in XLM so much, right? Just based off purely technical factors, XLM is looking amazing. So yeah, I guess this is all about EMAs. Like, if there is anything that you did not understand during this video, I need you to like rewatch this. Like seriously, I'm trying to condense all of my knowledge into videos right here, and I'm spending a lot of time just doing a brain dump. So I need you guys to do your own due diligence as well. There's a lot of things that you are not going to pick up on during your first time watching this video that you are going to pick up on when you watch this for the second or third time. Heck, even I can learn some things when I rewatch these videos, simply because I'm literally just doing a brain dump right here. So rewatch these videos, like everything, right? Watch it till the end, seriously. Like a couple of hours of education goes a extremely long way to saving you money in the future. So don't be lazy, right? We're trying to take other people's money in during these markets, right? When we're in a market, we're trying to take other people's money. So do your own due diligence, right? Get better than them so that you can take their money. Make sense? So, like, yeah, XLM, it's starting to curve up. I will start to look for longs on XLM right now. So, yeah, that was the video on EMAs. No, it's been a long one, but I hope it was a value-packed one. And I hope you enjoyed this. Right, and I'll see you in the next video where probably I'll do a video on stop losses since people are asking about that. Maybe another video on breakouts. So yeah, with that said, may the gains be with you. And peace.